Victoria's Secret just announced some cost-cutting initiatives which should help the bottom line. But with this announcement, the share price actually went down. And so the question is there an opportunity for sort of like contrarian value investors like myself with this name? That's what I'm going to dive into in this video. So guys, smash that like button, subscribe if you're new, and of course, leave a meow in the chat. You're watching More Money, let's get it. What's up guys, and welcome back to the channel where the goal here is to help at least 1,000 people achieve financial independence much sooner. And this one's very interesting, so let's dive right into this one. And so you can see here, Victoria's Secret actually fired workers in management roles that represents approximately 5% of their home office headcount and is expected to save approximately $40 million. And that's a little nuts because if you just take $40 million and divide it by 160 people, that's around $250,000 per person. So I'm assuming that salaries, benefits, plus maybe sort of like teeny spending and capex or whatever else that might get expensed through the P&L. Sometimes there is some capex that does get expensed through the P&L. It doesn't all just get capitalized. So there might be some of that. But overall, you can see that there's a huge amount of savings that the company can generate by letting go of these roles. But that speaks to a little bit of the slowdown in the industry. Do they actually need those roles in the medium term as we sort of enter into a consumer-led slowdown? So I don't know if this actually helps EPS grow so much that it's a profit protection strategy in an environment where revenues are declining and margins are getting squeezed. And with their latest guidance, they actually lend credence to my assumption that that's exactly what's happening. You can see here that their fiscal year 2022 outlook for net sales is that it's going to be up in the low single digits to being down in the low single digits. So probably, if I'm a betting man, it'll probably be lower. But notice the second line that I've highlighted, and that is that the gross margin rate is coming down. So in order for them to support their top line, they're probably going to have to engage in more promotionality in this environment than they did in previous environments. So that's going to bring their gross profit margin down, which of course could crash that EPS. And you can see with their commentary on their 2022 outlook, there's a real possibility that they can go backwards this year. Margins are definitely going backwards as shown with the margin decline in Q1 of 2022, but they say that they remain focused on delivering sales that are flat to up low single digits compared to last year. So we'll see if they can sort of achieve parity with last year or be a little bit higher than last year. We'll see how this plays out. And here's what I mean about the gross profit margin decline. This is their financial statements for Q1. You can see that the gross profit margin dropped to 37% from 43% in the first quarter a year ago. And of course, revenue is also down 5% year over year over the quarters. And so where this becomes a big challenge is once you start going backwards on the top line and your margins start to decline or your gross profit margins get squeezed, notice what happens to your net income as a percentage of sales. Notice how that almost has been cut in half. So last year they made approximately $2 per share, and this year they're closer to $1 per share. So gross profit margins really impact retailers because they overall operate at such low margins. When you're operating with net income margins in the low double digits, so 10, 11, 12 to 15%, any declines to that gross profit margin where you get squeezed is going to impact the business considerably. Now, what happened in the first quarter is an indication of what could happen throughout the rest of the year, but how does sort of Victoria's Secret's financial or their results look sort of 3, 4, 5 years out? And I actually built a model that the Patreons have access to, and I'm going to show you sort of like what my forecast is. You can see that I'm actually having trouble believing that the gross profit margins don't go back to those pre-COVID levels, which tend to fall in the high 20s and low 30s range. So remember, I just showed you gross profit margins in the first quarter of 36%. I actually think there is a possibility that it can go even lower. Notice 2019, 2020, 2021, those are all around 30%. So that's how I'm actually modeling this opportunity out. I think you make a mistake if you're just taking Q1's profit margin and you push that out over to the next 3, 4, 5, 6 years. You really have to prove to me that you can maintain high profit margins that are elevated beyond your historical experience. And I just don't think that they've been able to show just that. In fact, I believe that they've shown just the opposite, that you had a high watermark in 2021 and early in 2022, you're starting to see it decline. And so I'm happy to bring that profit margin back down to that 30% range, which is where they've been operating before. And so the question is, what exactly does that do to the valuation? Well, you can already imagine that I think most of the investment community is forecasting out higher profit margins or gross profit margins. I'm not. So I'm going to fall well under what the industry is valuing this company at. And you can see it here, that using a low terminal multiple of 10 times earnings, and I'm penalizing them for the debt that they have on their balance sheet, I'm getting to an EPS valuation of approximately $10, $11 per share. Their current share price is $28 per share. So I believe that the current share price as a percentage of my intrinsic value of this company is much higher than what I would expect it to be. And so you can see that I fall well outside the bounds of sort of like what people are valuing this company at, but I do believe that I have a very strong argument. The last time I fell this far out of bounds with the valuation was with Open Door Technologies, when in October of 2021, I said that I don't think the company's worth more than $6 or $7 a share. But notice how subsequent to that, those shares actually did end up collapsing, and they're now trading closer in line to sort of like where I had the valuation. I'm not saying Victoria's Secret shares are going to collapse. I'm just saying that I'm falling outside of sort of what I think the investment community believes that this company can generate. But like I always say, I could always be wrong, but I can just vote with my dollars and just not invest in this opportunity, and that's totally okay. Now, just for argument's sake, I do want to show you what happens when you book in the margins at what I believe the majority of the investment community is booking in. So you can see here, if they maintain profit margins near what they closed Q1 2022 at, which is approximately 35% gross profit margins, then the company is actually valued at $65 per share, and that includes the penalization of the debt on the balance sheet. So it's clear that the market is falling somewhere in between these two scenarios, my personal scenario and this particular scenario, with the current share price of approximately $29 per share. And this is what I mean about the balance sheet and why I've been penalizing them. Note that the balance sheet is not particularly strong, but there is a lot of cash available to assist with liquidity needs in this particularly challenged environment. That long-term debt number obviously doesn't necessarily have to be paid tomorrow, but just as good practice in my valuations, I penalize every company on excess debt. It's really up to you how you sort of want to handle that. You don't have to include it in, and that's totally fine. Now, how do you get access to that model for Victoria's Secret so that you can sort of figure out how to sort of value it for yourself? Well, you can get access to all of my models at the lower tier of the Patreons. Now, what I do recommend is that if you do enjoy the models, I recommend you join us for a live presentation each month where I show my very best research work, which are reserved for this call. And like I always say, there's never any risk to you, because if you decide to try it and you decide that it's not for you, no problem. Message me, let me know that you tried it and it wasn't for you, and I'll completely refund your first month's subscription, because I don't want you to lose any money if you're not finding value in this product. Now, with that said, the one interesting area that I think requires a little bit more research, especially on my end, is Warren Buffett is continuing to invest in oil companies. And so that's something that we really got to look into. And I started that by dissecting why Warren Buffett is continuing to invest in Occidental Petroleum. And you can actually get to that video right here.